What is going on, investors? Hopefully, guys are doing well out there. Big tech earnings get kicked off today, and we're going to start things off with Alphabet, otherwise known as Google. Now, year to date, the stock is down about 27%, but after reporting earnings after the bell, which really, quite frankly, aren't that great, but actually not that bad at the same time, well, the stock is up fractionally, basically getting back the losses that it had during the regular session. We'll talk about, from a technical perspective, why this actually could be a decent buying opportunity for Google heading into the rest of the week. Now, we've got to get into these Q2 earnings. We'll take a look at the revenues, the profits. We'll look at the different business segments that Google has. We'll look at the upcoming quarters as well. Where does Wall Street have this stock trading in terms of its revenue estimates and its earning estimates for the upcoming quarters? We'll go through that. We'll talk about some of the things that went well in the most recent quarter from Google from a financial perspective, and some things that struggled, which could potentially lead to better gains in the future for Google. We'll go through the balance sheet. I think the big question that we have is this company has $124 billion with a B, 124, nearly $125 billion worth of cash. What the heck are they going to do with all of that money? Did they do some buybacks in the most recent quarter? Is there any acquisitions on the table? When you got $125 billion worth of cash and a company that is wildly as profitable as this, I think they need to use that cash. We'll talk about that. We'll go over Google Cloud, which grew 35% revenue growth, but is still not profitable. We'll talk about, is there some concerns there? And we'll look at this from a technical perspective. Now, those Q2 numbers came in. Revenue came in at this is a lucky number, $69.69 billion. That was about 12% revenue growth year over year. It missed expectations by about $110 million, depending on where you got those expectations. They did miss on the earnings side. I think we're probably going to see most multinational companies miss on that earnings side because the company noted in their press release they had to reflect about a 3.7% decline in revenue just based on foreign currency movements. Wall Street sometimes gives the big multinational companies a pass because a headwind in FX today often turns into a tailwind down in the future, and they end up benefiting. We'll see if that ends up happening. Now, I want to go through each of the individual business segments over at Google, including YouTube, the search business, and the cloud business. But the first thing I want to do before we get to that is look at the analyst estimates for the upcoming quarters, because we talked about how Google basically came in line with the revenue estimates, and minus the FX headwinds, they were pretty much right there with their EPS or their earnings side. Wall Street has the upcoming quarter, that's Q3. We'll talk about Q2 here in a moment, but Q3 we're expecting not very much growth year over year, about 12%. In fact, less growth than analysts were projecting in the most recent quarter. So you're coming in about $73 billion worth of revenue in the upcoming quarter. I think that's also giving some relief to the stock as it's up about a couple of bucks in the after hours, basically trading where it was about a day ago. If you look a little further out with Google in terms of its revenue estimates, Wall Street's projecting kind of a mid-teens grower into the foreseeable future on that revenue estimate. And certainly when we go through the different business segments, there's definitely some opportunities for Google to meet that. On the earnings side, very similar story. For the next couple of quarters, you're actually anticipating earnings contraction. My guess is some analysts are factoring in the fact that you'll have some FX or some currency headwinds heading into the next couple of quarters as the dollar remains strong against other currencies that Google collects payments in, but it's expected to reaccelerate into the back half of next year. We'll see if that materializes. Now, on to the different business segments over at Google. Their absolute bread and butter business, as you know, is Google Search. That went from $35.8 billion all the way up to about $40 billion. That was 13% growth. I know 13% growth in the world of tech, not necessarily that great. There's certainly more tech companies out there that are growing at a faster rate, but we're talking about a $35 billion, not in a year, not in 2 years. We're talking about just in a quarter. You went from 35 up to $40 billion in just one quarter's worth of revenue. That's fantastic growth. If you're going to have growth over at Google, you want it to be in Google search. And my guess is you probably saw the travel industry really pick up their spend in Google search. That more than outpaced the actual sideways action you saw on YouTube. I could have told you anecdotally, I look at my earnings this year compared to last year, and it's absolutely fallen off the cliff. My guess is the ads that pay on my type of videos are fintech and crypto, and those industries have been absolutely obliterated. Notice over at YouTube, went from $7 billion worth of revenue up just marginally. I mean, that's just fractionally up to $7.3 billion. You look over at Google Network. This is the networks of sites that are displaying AdSense and other ads on their website. Also up a little more than fractionally, but not up significantly. Up from $7.6 billion up to about $8.3 billion. So a little bit of growth in other places. Again, I think search probably had a strong quarter or a stronger than anticipated quarter because you have a lot of travel and airlines and hotels that are making boatloads of money right now. So they're spending a lot on advertising. As we look towards Q3 and Q4, those obviously a little bit lighter probably on the travel type ad demand, but we'll probably see a pickup certainly in product and consumer and shoppable type ads as people get ready for the holiday season. So you had that total Google advertising business over at Google went from about $50.4 billion up to about $56.3 billion. We saw a contraction in Google Other. This is Google Play Store and also hardware, phones, and other products that Google sells. That actually declined from $6.6 billion down to $6.5. Sometimes you have product cycles there where you don't have as strong a demand this year as compared to last year. Also, we've seen companies like Google and Apple come under pressure for the fees that they charge on their App Store. Could be a little bit of that year over year as well. Our total Google services went from $57 billion up to about we'll call that $63 billion. Here's the more impressive thing is we have Google Cloud went from $4.6 billion all the way up to $6.3 billion. I want to show you that kind of on a quarter over quarter basis. So I've updated Q2 right here at the top at that $6.3 billion. We'll talk about profit here in a second, but notice last quarter, just a quarter ago, we were at $5.8 billion. A year ago, we were at just $4.6 billion. So you went from $4.6 billion a year ago all the way up to $6.3 billion this year. That is 35% growth on that cloud side over at Google. That is absolutely fantastic. So you had total revenues come in at about that $69.7 billion. Again, right in line with what estimates. A consensus estimate was 69.8, and that's basically where Google came in minus some FX headwinds. Now, I think the other thing that took people by surprise is the number of employees. I tell you what, we're seeing a lot of press releases across all industries, but particularly in tech, how they're cutting back, hiring, maybe even laying off some people. I wouldn't take that as an indication on where these companies are and where they are going. These companies, in my opinion, are overstaffed and pay way too much for their employees. They are in really expensive real estate out here in California. I wish they would spread out and go to the cheaper parts of California. And for some of these companies, they've actually done that. It's helped control cost. You see number of employees really went up massively from 144,000 all the way up to 174,000. That's a lot of hiring over at Google, and that came over expectations. I think more importantly, though, at Google, we've got our operating income, our services, which is essentially our advertising business plus Android and Google Play Store, just up marginally from that operating income. So despite the increase in our revenue from 57 billion up to about 63 billion, notice that our operating income in that unit basically went sideways from 22.3 up just fractionally to 22.7 billion. Here's the Google Cloud. So we talked about how this business segment was up 35% year over year, went from an operating loss last year at 591. That didn't get any better. In fact, it got a little bit worse at an $858 million loss. I'll show that to you over here on a quarterly over quarter basis. Look, a couple of years ago, we were losing over $1 billion. So they've shaved that down a little bit. The other thing that I talked about on our Google earnings preview video is the fact that think of Google Cloud for Google like renting an extra bedroom in your house or renting your car like on Turo or something like that. if the room was going to sit there empty anyways, it's just found revenue. And that's what Google is doing in part with their Google Cloud business. They have to operate such massive servers to operate YouTube and other parts of their business. They have all this extra server space and they're essentially selling the excess. So the fact that they lose money on that on a quarterly basis, not necessarily telling the full story. Now, we talked about how despite the increase in revenues year over year from 61 billion up to 69 on the total company wide, notice our operating margins went from 31% down south of 30, which is a little bit unique with Google over the last year. They've kept those margins over 30. We dipped down into 28%. Again, a lot of that has to do with the fact that you had foreign currency exchange. And I think that is part of the reason why investors are giving this stock a little bit of a bump in the after hours. Now, we come over to the balance sheet over at Google, $125 billion worth of cash, another $35 billion in accounts receivable. This is a company that's absolutely flush with cash. We'll look at cash flows. Obviously, they're wildly profitable. Even the decline in margins not hurting this company one bit. What the heck is it going to do with all of this money? We know from a regulatory perspective, it'd be tough buying some of these beaten down online ad stocks like a Snapchat, like a Pinterest. What is Google going to move into? Because look, there's only so much stock you can buy back. There's only so much investment you can make into your employees and those types of things. $125 billion in cash. What the heck are they going to do with that amount of money? Because they have just $14.7 billion worth of long-term debt. While they do have other expenses over at Google, plenty of cash flow and plenty of profits to cover that. So in terms of those revenues, again, we went from about 62 billion up to very close to 70 billion quarter over quarter. Over the last 6 months, you went from 117 all the way up to 137. We notice our cost of revenues over at Google stayed relatively flat. Okay, they went up, in my opinion, about what you'd expect with this revenue rise. You went from 26 up to about 30. Here's the other costs that I keep a little bit more closer eye on. Research and development went from 7.7 up to about 9.8 billion. Sales and marketing 5.2 to 6.6. Here's the really impressive thing. They really kept the general administrative in check. You went from 3.3 up just fractionally to 3.7. So they spent the vast majority on just serving the ads, some research and development, and selling and marketing of that ad. I like that mix over at Google. Total costs and expenses went up just fractionally under $8 billion from 42 up to about 50. So we grew our revenues by just under 8 billion, but unfortunately our costs also grew about the same. And you notice here from an income perspective, basically flat from 19.4 up to 19.5. That's income from operations. Now it paints a slightly different story when you stretch it out and include Q1. You went from 35.8. This is income from operations. This is almost profit before you pay your taxes, before you pay interest on any kind of debt you might have outstanding and other income non-related to the business. We'll get down to net income here in a second, but I tend to focus on income from operations because this weeds out some things that Google, quite frankly, doesn't have a lot of control over, including corporate income taxes and interest rates. Over the last 6 months, you went from about 30, so we'll call that about 36 billion up to close to 40 billion on that operating income side. It's just unbelievable. I know I'm kind of glossing over this and I'm saying, oh yeah, we went from 62 billion up to 70 billion. Realize that is in one quarter, not for 10 years. It's not for 100 years. We're talking about such a dominant company, and this is why when these stocks go down, we are knee-jerking trying to come in here and buy these, because even when you flow all the way down to net income, things are very, very glorious. Now, over the last quarter, net income went down, okay? Went from 18.5 down to 16, and over the last 6 months, paints the same story. Went from about 36.5 down to about 32.5, but again, some of that is FX related. Also, you've just seen a general slowdown in the economy, and inflation does impact Google to a certain degree as well, as they rely on businesses to buy ads on their platform. Now, let's come over here and look at cash flows. We'll see the all-important buybacks, capital expenditures, and some other things. We've got our quarter ended here. The second column is our most recent quarter. So we pull down that net income number of $16 billion. Again, I just showed you that net income number. Net income is after you pay everything. It's the bottom line, so to speak. And we went from 18.5 down to the 16 billion. Again, this is on a quarterly basis. So you have that 18.5 number. That was last year. You pull down the most recent number at 16 $16 billion. You get to add things back in like depreciation. This is a non-cash charge that you have to recognize. You also have stock-based compensation, somewhat controversial. I don't think you should be able to add this back in, but guess what? The SEC and accounting rules allow you to add it back in, so I guess that's what we're going to do. And you come down here after all your additions, all your subtractions, net cash provided by the operating activities, you went from about $21.9 billion down to $19.4 billion. Over the last 6 months, you see that this quarter was a little bit of a struggle. First quarter was a little bit better. You went from $41 billion last year all the way up to about $44.5. So not a great quarter. You had decreasing net income. You had decreasing cash flows. Again, we're talking about from just a fractional perspective, despite increase in revenue over at Google. You do have some purchase of property, plant, and equipment. This is probably servers on the cloud side, but really what you're looking for is this repurchase of common stock. Last year, you bought back about $12.8 billion worth of share. This year, I like to see it increase. When your stock is down 25% year to date and you have $125 billion sitting on the balance sheet, you better use some of that, and that's what Google did. They increased their buyback just a little bit year over year, up to about $15.2 billion worth of stock that they buy back over 6 months. Last year, you did $24 billion. This year, I like to see this close to $28.5 billion on that buyback. They also are repaying their debt. Notice $13 billion worth of debt payments in the most recent quarter, but notice that they issued about 12.8. So what this company is doing is likely some kind of refinancing. These also could be certain lines of credit for different kinds of products, servers, those types of expenses, but net down a little bit on that long-term debt side. You see for the 6 months plays out a similar story. They issued about $29 billion in debt and they paid down just fractionally more than that. When you have these types of cash flows, when you have this much cash on the balance sheet and interest rates, despite all the news about how they're quote unquote going up, are still historically very low. So these companies doing these types of financing, despite having plenty of cash and plenty of cash flows, nothing I would be too concerned about. All things being considered, a sideways quarter for Google when it comes to profits, net incomes, and cash flows, but beat expectations just enough to keep the stock above a level of support that we've been monitoring, quite frankly, for several months now on Google. There is some sideways consolidation that we had back in 2021 from February till March, and this is actually pretty significant sideways consolidation because that has been the area of support that we've seen with Google hold up, really, quite frankly, since May. So for nearly 3 months, Google has kind of been bouncing around about the $100 share mark up to about 119. We've been in about a $20 range. And quite frankly, we're seeing this in Amazon stock. We're seeing this in a number of stocks that we're watching here in the stock market. Over the last couple of months, the price action has actually started to compress in a tighter range. So you as an investor out there are really just monitoring things to see if anything different happens. Don't let a one press release, one headline, one move up or down in the stock really change your opinion about this. With Google, we would quite frankly need to get back up and above the $125 range before you actually did anything different from a technical perspective than what we've done over the past 90 days. And the same goes true for the downside. Now, briefly today, the stock broke below kind of this upper trend that we've been making, and it was down here at about $104, $105 per share. But again, that is essentially inside our sideways consolidation that we've been making for 90 days with Google. So as long as Google is between $100 and $125 per share, there's really nothing to report from a technical perspective. You're looking for a break to the upside. If you break to the upside, you've got plenty of upside left in the stock. There's some clear areas of resistance that should materialize on this stock up here about $128 per share. If for some reason you were to break to the downside on this stock, there should be some areas of support here right at $100. Even lower than that, you're probably looking south of about $90 per share. But when we look south of $90 per share over at Google, the valuation starts making a lot more sense. from an earnings perspective, from a positive cash flow sense, and from this sense that this company has north of $124 billion worth of cash and is just going to continue to step in here and buy the stock if there's any kind of weakness. What does this all add up to? I think in the shorter term, I bought this stock last week at about a 107, 108. That's where it's trading at now. We got a little bit, and this was before we had any clarity on the most recent quarter. Now that we have clarity on the most recent quarter, knowing that income and margins were really impacted by the fact that you have foreign currency exchange impacts in the most recent quarter, quite frankly, this is what you were looking for with Google. The upside is if they are able to reaccelerate the growth in YouTube and continue 30% growth over on the cloud business, because if you continue 30% type growth in the cloud business, you're basically doubling that business every 2 years. Notice in Q2, 2 years ago, you were at $3 billion. 2 years later, at about a 30% growth rate in that business unit, you've now doubled that to $6 billion. So 2 years forward with Google Cloud, you should be right at about $12 to $13 billion worth of revenue. I think if you double that revenue, these profits should at the very least start to shrivel up, and we might start seeing positive income from Google Cloud. I don't think positive margins from Google Cloud are priced into Google stock, because we know with AWS, you're at $67 billion worth of trailing 12 months, and they earned $21 billion off of just $67 billion worth of revenue. Folks, that's like 30% margins. If Google can start squeezing out 10, 20, 30% gross margins on the revenue that they make in Google Cloud, I don't think that's priced into the stock. And obviously you have longer term tailwinds with the economy and spending likely hitting a rough patch for the next couple of quarters as we quote unquote go into some kind of recession. But on the other side of that is a lot of new businesses that get set up, and guess where they'll run to advertise their business? Likely Google Search, YouTube, and they'll use things like Google Cloud and other services that Google operates in. I would buy this stock at 107. I'll probably be logging into my E-Trade account tomorrow morning and be placing a bid. Again, from a technical perspective, not the worst spot to accumulate these shares, knowing full well that Google is going to continue to buy these shares at these levels over the next couple of quarters, as they have plenty of cash left to do that on their buyback. Hopefully you guys enjoyed today's video. We'll be back in soon with more. Good luck with your investments.